Guys, I hope you guys are having a good day. I'm Dr. Boyce Watkins from the Black Business School in Your Black World. And I want to say hello to everybody on the Black Financial Channel or any of the other related sites that we have. I wanted to talk to you guys today about some recent reports in terms of the Trump administration seeking to blame the Fed for, more specifically the Federal Reserve and the chairman of the Fed for basically not supporting the Trump administration's push for a trade war with China. Trump has gone out of his way to sort of preemptively attack the Fed, in particular Jerome Powell and others associated with the Fed, as sort of the individuals that are responsible for the failing economy. He's sort of casting them as the bad guy right off the bat. And a lot of people disagree with that, and I'm one of them. So here's what's being said about this here in CNN Business. I'll read this really quick. It's going to be a short video. As the U.S. economy continues its lengthy expansion, the Fed raised interest rates 9 times between 2015 and last year, but they did cut rates in July. And there's little evidence that the interest rates controlled by the Fed are the central problem ailing the economy. It's very cheap to borrow money today. Companies are not complaining about access to credit, but they are complaining about tariffs. President Donald Trump's deepening trade war with China has exacerbated the economic slowdown rippling across the world. Now there's evidence that the slowdown has arrived on U.S. shores. So the recession is it's starting soon. A lot of people consider this to be self-inflicted. According to Mark Zandi, the chief economist at Moody's Analytics, he says that the trade war is a dagger in the body of the economy. The economy will not return to health until you take the dagger out, no matter how much antibiotics you pump in. My perception is that Donald Trump is looking for the Fed to back him. He's saying, look, I want to go to war with China. I need you guys to keep lowering interest rates because the Chinese are manipulating their currency in order to fight us in the trade war. But a lot of people aren't supporting Trump's trade war. So part of it does start with, sort of the lack of political will amongst those who are in the Trump administration to even fight a trade war. A lot of them are saying, look, we don't even want to fight with China, but it's an interesting kind of dynamic. And what's going on right now is that right now Trump just imposed, or the administration imposed 15% tariffs on $112 billion of Chinese goods, which prompted further retaliation from Beijing. Manufacturing activity in the United States contracted in August for the first time in 3 years, which is a big deal because these higher tariffs are affecting supply chains for these businesses. And so according to the Institute for Supply Chain Management, they said, quote, while business is strong, there's an undercurrent of fear and alarm regarding the trade wars and a potential recession. One executive of a chemical products company said. Another executive from a computer electronics products maker said, quote, tariffs continue to be a strain on the supply chain and the economy overall. Let's see here. So here's another quote. Manufacturing weakness has nothing to do with Fed policy. This is all self-inflicted, all the tariffs and trade uncertainty. And so what's really kind of driving a lot of the potential downturn right now is uncertainty, which is always bad for investing. When companies and consumers and investors aren't sure of the future, prices tend to drop because people aren't willing to put themselves out there financially if they're not sure, right? So it's like a relationship. If you're not sure about your partner, then you're less likely to want to go out with them or to spend money on them or to have sex with them, right? So basically that's what's sort of happening. There's a lot less economic love going around in the economy because everybody's sort of scared and everybody's worried about these tariffs. Now, could the Fed actually be more helpful to Trump as he's doing this? They probably could, but I think there's an argument to be made that perhaps some of this trade war is going a little bit too far. But on the flip side, the alternative argument is that the Chinese have really done a bad job of protecting intellectual property. They steal technology all the time. The Trump folks are arguing, well, look, if we hadn't confronted them, they would still be doing it. They wouldn't even be talking about changing their policies. So it's really sort of a matter of saying, which strategy is going to work better long term. Now, here's the problem for the Trump administration. Next year is an election year. And one of the things that Trump has been running on is the strength of the economy. So if the narrative is pursued that says that Trump screwed up the economy because of his crazy trade policy, then that's going to hurt Trump's ability to get reelected. So what the Trump administration is trying to do right now from a political standpoint is place the blame on the Fed, place the blame on Jerome Powell. They're preparing, they're sort of laying the foundation for that argument right now with Trump's tweets, where he's tweeting at Powell and attacking him. But remember, Trump also appointed him, so that kind of looks a little bit weird. And so this is going to be interesting. Now, how does this affect you? I don't think it's going to affect the prices of the things you pay all that much, to be honest with you. Because remember, if they put tariffs on China, all that means is that the supplier is going to get their stuff somewhere else, right? Now it does create problems in the supply chain, and maybe some of those cost increases are pushed on to the consumer, but a lot of times they're not. It just leads to a switch. And I think that's one of the long-term geopolitical strategies of the Trump administration happens to be. I believe that they're trying to undermine China's economic dominance by getting U.S. manufacturers who get all this stuff from China to just go get it from, Malaysia or something, right? It's not going to bring jobs back home to the U.S. unless they specifically incentivize companies to create jobs in the U.S. And I would love to see politicians do that, because I do think that would be good for the country. Even if it's not so great for Wall Street and the wealthy people, it will be great for working class people. But then again, we live in a society though that doesn't seem to care about working class people anymore. I don't know why. It's kind of weird, because I think we could do well and still do good at the same time. So anyway, I'm going to go, guys. I got to get out of here. Make sure you subscribe, theblackfinancialchannel.com. That's where we do financial news and daily updates every day. It's basically almost like an MSNBC, except from a black perspective, or CNBC rather. So go to theblackfinancialchannel.com and subscribe. Also, if you haven't learned to buy your first share of stock, the Black Business School is sponsoring a free training on how to buy your first share of stock for your whole family. Go to blackmoney100.com. That's blackmoney100.com. Hit the thumbs up, share, and subscribe before you get out of here. I'll talk to you guys soon. And don't forget also, the All Black National Convention happens the weekend of September 27th. So if you want to be around Black folks who are thinking big and trying to do big things, go to allblacknationalconvention.com. That's allblacknationalconvention.com. See you guys soon. Have a great day. And I see you in here, H-Town Click and Smoking Too Hard. And Laura, you say, the Messiah. Good to see you guys. Thank you guys for hanging out with me today. I'll talk to you soon. Bye-bye. Peace.